Can I make $5,000 or more selling puts in the next 20 minutes of this video? Selling puts is by far one of the best, safest, and most consistent strategies to make weekly income in option trading. This step-by-step guide will help you better than any other video, and I'm going to be showing you proof. If you know the right time to sell puts, you can collect a ton of money from premiums with very little risk. So first, I'm going to explain to you very simply how selling put options works. Then we're going to get into the stocks and indicators that I look for when I'm about to sell some put options. And lastly, to show you real life proof trading so you can get examples and see how I do it in my own portfolio, I'm going to be doing some live trading and collecting income, and you'll be very surprised how much money I can make in just 20 minutes. I'm going to be selling puts live. I'm going to see if I can make $5,000 or ideally even more than that in this video. Let's keep track on the bottom right somewhere here, and let's get educated on consistently making money option trading. So get ready and let's flood your pockets with some money. Firstly, there are two reasons why you're going to want to sell put option contracts. One, to generate income, and two, to buy shares of a stock at a cheaper price than you can normally get them on the market. Imagine that a stock is trading for $165. You can buy that stock cheaper than the current price of the market. My ebook talks about selling puts in detail, and I'm going to give you the number one secret to this strategy, which is actually my number one strategy. A put option is simply a contract between the buyer and the seller. The buyer of the put option will have the option to sell 100 shares of stock to you as a seller at the strike price. And of course, you can pick any strike price you want to potentially buy the stock at that strike price if you do get assigned. So keep in mind that you want to be comfortable with buying 100 shares per option contract of a stock that you get to choose. You are in full control, but you must make sure that you do like the stock, because if you get assigned, you will own 100 shares. So selling puts can be expensive because this is one of the strategies where you do need to have 100 shares of capital ready to go. So if you have a small portfolio, you will have to stick to cheaper stocks such as HIMS, Palantir, NEO under $5 of course, American Airlines, and well, other stocks that meet your portfolio size so you have proper position sizing and you don't hinder your risk management. And the best part about this strategy is that you'll get paid to sell the option to the buyer. At worst, you will buy the shares for cheaper, and either way, your cash will grow in your account. Remember, the buyer has to pay you a premium to have the option to sell shares to you at that strike price. The option buyer is paying to have that right. Here's an analogy to help you out. Puts are basically like you're an insurance company. You are charging a premium for the risk of the stock falling down and you having to buy that stock at that strike price. You are becoming a mini insurance company that can print your own money in the form of premium that you are collecting. The way it works is you collect a bunch of money up front when you sell a put option, and some of the trades you will lose. Again, we can't be perfect here. I'm not perfect. I make mistakes all the time. And just in trading, if you have a high win ratio, you win more trades than you lose, you will come out profitable. So in this example, what you want to do with this strategy is you will be collecting money up front. Some of the trades you will lose, but your winners will far exceed your losers if you follow my step-by-step instructions, as well as learn from the live trading that I'm going to do shortly. So let's use some real numbers to help you understand. Microsoft is currently trading at $410 per share right now. Let's say that you think Microsoft is at a low right now, and you don't think it's going to go much lower in the next 30 days. So what you want to do is you want to sell a put option contract on it. You pick the strike of $405, which means if Microsoft does happen to fall below 405, you have to be comfortable to buy 100 shares at that price. But you won't mind that because you think Microsoft is going to be going up. You love Microsoft long term. You think that it's at a pretty good low, so you will be happy to buy it at 405. It's currently at 410, so you're going to get paid to buy it for $5 cheaper than where the market is at right now. Seems pretty much like crazy, right? Like, why would someone do this? Well, someone else out there in the world thinks that the stock might go down a lot lower. They may be right or they may be wrong. Either way, you are happy making this strategy in this trade. And let's open up Robinhood and see what I would actually get paid if I decide to sell the put option. So let's pick a strike price of 405. All right, so I'm gonna go to trade options as I usually do, trade options, and then I will go for something very short term. So I'm gonna go very short term here. We'll go actually to we'll give it a little bit of time. So let's just go to the end of the month, which is just a couple of weeks. So if I go to the 405 right here, you will see that the premium collected is $4.80 or $480. So right here, I can actually make a 1% return. Now, I know this is 1% because I'm putting up 405, and then 1% of 405 is going to be about $4.05. So there's actually over 1% return. I'm getting paid over 1% in under 30 days to buy a stock that is going to be a very good buy at 405. In fact, this is actually under 30 days. If I were to go to about 30 days, I would be a lot closer to actually almost 2%. So you can see right here that it's actually $7.05. So if I were to execute this option, one contract here would give me about $705. Actually, you will see here that I was actually on buy a put option, but I need to be on sell. So actually the price will be a little bit different. It's going to be $615, which is still amazing. I noticed that because I saw there was a max profit, and that was a bit weird. And this strategy actually has a max loss. Although the max loss here will look extremely scary, you might be thinking just, oh my goodness, why would you ever collect $615 with the max loss of $39,000? This max loss is actually, it's not really correct. In theory, it is correct, but what it means is if Microsoft went down to zero, you would lose $39,000. I don't know about you, but Microsoft is not going to go down to zero. I think the world has to literally end for the stock to fall that much. There is no way a company the size of Microsoft will go bankrupt. There's actually almost no way the stock will even fall 50%. Yet alone, in most years, it doesn't even fall 10%, or it doesn't even fall at all. The stock is rising, right? So although the max loss is very scary, this is the equivalent of you getting into your car and the max loss says, well, you may not live today. So, yes, that's scary, but most people still have to drive to work. We still have life to live, and we still take that very, very small risk to go into a car every single day. It's the same thing here. So it has a very big max loss, but in all reality, this is a very, very safe trade that I've been doing for the past 10 years. I've worked for Goldman Sachs as well as a couple other hedge funds. I have a degree in this. I've sat with many experts on this. I've talked to many financial advisors. I've talked to hedge fund managers. This is a very standard, easy strategy that basically every single person in the world does. I've seen billionaire portfolios as well. This is just a typical strategy that they are using. So basically, let's do some scenario analysis. If Microsoft goes up to say 420, you're totally safe. You're going to be making money. If Microsoft goes up to anything, really, if it goes up at all, you're going to be making money. If Microsoft actually goes down a little bit towards 405, you're still actually going to make money as long as Microsoft stays above 4. Now, at 405, if Microsoft were to hit 405, you would now be in assignment territory, meaning that you will get assigned at expiration if it's in the money. However, you still made a gain because you are collecting $6.15 here, okay? So we have $6.15. So really, if it's at 405, you're good. If it's at 404, you lose $1, but you still collect the $6.15, so you are still positive $5.15. In fact, your break even here would have to go 405 minus the premium that you collect. So the break even here would be $3.99, or actually $398.85. I'm doing the math in my head. So at $398.85, that's your break even point, okay? You will be buying Microsoft at 405 or below, but at $398.85, that's actually your break even. So if it goes lower than that, you will be at a slight loss, even considering the premium that you collected, which is totally okay because you may deem to yourself that I want to buy Microsoft. I'm very happy. And by the way, this is the truth. This is not just an example. This is exactly a trade that I would make. And as you'll see shortly, I will make trades that look very similar to this. So, if Microsoft goes down past 405, you'll have to buy 100 shares of Microsoft, but it's not even that bad because you want to own the stock anyways. But how do you know if a stock is not going to go down? And that's by using some simple things called technical analysis. So I'm going to show you some technical analysis as well. And we're going to pick a couple of random stocks on Robinhood, and I'm going to be looking at Yahoo Finance, and I'm going to be looking at specific technical analysis that I use on a very consistent basis. Spoiler, I love to use RSI as well as the moving average, as well as the Bollinger Band. Now, these are the only real 3 technical analysis tools that I use. There are many, many others, but I love to keep it super simple. I like to be so simple that I can teach anyone how to make $5,000 or $10,000 a month passively online within 30 to 60 days, as long as they have some capital to work with, of course. Or if they have a small portfolio, then I like to help folks scale small portfolios. I specialize in $5,000 to $10,000 portfolios and doubling them in 6 to 12 months if possible. So for me, I like to keep it as simple as possible because I am working with a lot of beginners, and I focus on helping beginners get into an intermediate or advanced option trader territory where they can leave their 9-to-5 job and actually do this for a living and have a lot of flexibility in their life like I have. So with that being said, let's just get into some real examples and let's show you exactly how I'm going to make some money in this video. All right, so now is the part where we see how much money I can make by selling options. We're going to keep track of it on the bottom right or the bottom left. As I make every trade, we're going to be adding this up. So let's see exactly how much money I can make in the next 10 or so minutes, all right? So the first thing that I want to do is I want to look at Google. Google is one of my favorite stocks. I'm very bullish on Google. Now, in the past 3 months, the stock did go up about 15%. I am going to be looking at technical analysis as well. I'm going to be showing you what I'm looking for technically when I am placing a trade, like at what strike do I pick it, why, and all of that whole process. So this is going to be like the most valuable thing that you can see because I've been doing this for 10 years. And that's exactly how I make my decisions. So if I go to Google, I go to charts. You can see right here, I'm going to get rid of these quick lines. These were drawn. So if you can see right here, actually, the stock has gone up. I'm using something called the Bollinger Band as well as the moving average. Both of these are very important for me, and I like to look at the 6-month view. So here you can see that Google is basically at the more higher end of its range. It did have an overreaction here and had a pullback. However, you can see that the Bollinger Band right at the middle is 161. Now, the RSI is not very high, but it's also not very low. It's at 63, which is a little bit higher than average. So this is actually a perfect candidate for selling a put option. Not that it's perfect for selling a put option because it's a little bit higher, but it's perfect because I don't know when Google's going to pull back. And if I want to invest in Google today, selling a put option is much better because I'm getting a cheaper price than what the stock is at currently. The stock's at 168 as I'm making this video. I'm going to sell a put option that is going to be towards the middle of the Bollinger Band of 161, 162. So I'm just going to go for 162.5. Now, I am going to pick an expiration date that's going to go out at least 30 days. This strategy is a little bit more boring. It's a little bit more chill. It's a bit more relaxed of a strategy. The whole goal is just to collect some income, be hands off, and be very passive with it as well as safe. So I'm going to go for June 21. So it's going to be about 5-6 weeks from today. Making this video, I'm going to go to sell put, and I am going to sell a put option for the 162. So I don't want to be too heavy on my exposure. So I'm going to probably go for a contract size of about 5. So I'm going to risk quite a bit here, and I'm going to collect $1,500 here on this trade. I'm going to go for a bid price of 305. Now, I will be honest with you, I could put in 3.1. I can start playing around and waiting, but for time purposes, I want to be very efficient with this video. I want to respect your time. I'm just going to go for 305. But if you want to make some extra money, you can play around with the bid ask. I could have asked for 310, and I may have actually gotten filled for 310. So that's kind of up to you. So far we've made $1,525 so far by selling a put option on Google. Now, one of my other top plays is American Airlines. This is a much cheaper play, specifically because American Airlines is about $14 per share. Now, this is my top play in my Discord, but right now I'm a little bit upset because as I'm making this video, I'm literally like 2 hours too late because the stock is skyrocketing. I have shares, I have covered call, I have sold a put option, but it's a little bit frustrating to see the stock go up because basically when a stock goes up, the put option premium goes down. It becomes less valuable because, as the stock goes up, it's becoming further out of the money. So right now, what we're going to do is we're going to go a little bit riskier. I'm going to show you a little bit shorter term of a trade. I'm going to go for the 14.5. Again, my goal is to actually get assigned. I do want to get assigned. If I don't get assigned, that's fine. I collect income. If I do get assigned, that's also fine with me because I still get to collect the income. But now I have the shares and I can run something called the wheel strategy, which we will cover later on, or, check out my channel for the wheel strategy. This is a very powerful strategy. So I'm going to go for selling a put option right now. I'm going to go for, since this is very cheap, I'm going to go for 20 contracts here, okay? So I'm going to go for just $17 per contract. And this is hopefully going to get filled for me since I did go towards the bid price. There you go, I got filled, so I made $1. So we're going to add that to the bottom of how much money I have made. So that is the second trade, which is going to be American Airlines. By the way, the reason why I like American Airlines so much, I didn't show you the technical analysis. I've been literally trading this since I started my program back in 2021. So it's been 3 years since I've been running Discord. I have been literally trading American Airlines since the very beginning. And it's because American Airlines has some of the most consistent returns. The stock doesn't actually move up or down a whole lot. So over the past 1 year, you can see how it actually started at 1402. Now it's at 1461. So over a whole year period, it has gone nowhere. It's still at exactly where it has been, which means that there's a lot of volatility, but really no direction. So when there's no direction, that makes a perfect candidate for selling options in general, because options love volatility. And when you're selling options, you hope that there isn't any big moves typically. So this is a very profitable strategy that I've been running from the very beginning. And the reason why is because right here, we're right in the middle of exactly what American Airlines has been historically valued at. So it's unlikely to get a whole lot cheaper. It's also unlikely to get a whole lot more expensive. So selling options on American Airlines is my top play right now. That's why I decided to just sell 20 contracts. Now I do have some more contracts actually in my portfolio. I have 35 contracts, 30 more contracts here. So keep in mind, I do already have some of this position. Now we have done Google, we have done American Airlines. I'm also going to go ahead and do Apple. Apple's having a little bit of an intraday move where Apple pulled back, and I really quickly want to sell some put options on Apple. Now I already have a pretty big position on Apple, but I'm going to sell some put options and show you that it is okay to have big positions on big, high quality companies, especially companies that you have a lot of belief in. For me, Apple is my top play. I was just listening to Warren Buffett have his discussion on Apple. They had a little bit of a cut. They had some sale at Berkshire Hathaway where they did get rid of $100 million worth of Apple, but he had stated that just because of rebalancing and other things that are very normal. He didn't actually lose his confidence in Apple. Now, what I'm going to do is on Apple, I'm going to go out for June 21. Actually, I can also go really short term. So again, if you're watching this in the future, just go for something short term, it's fine. You go for short term or longer term, you actually get compensated in proportion to the amount of time that there is till expiration. So whether you get paid $1,000 a week or $4,000 a month, it's basically give or take the same thing. So I'm going to go for a sell put. I'm going to go for the 177.5 strike price. My average cost right now is 182. Intraday, actually, Apple was above my average cost, and now it's a little bit below. 177.5 is perfectly reasonable for me because I'm actually going to be dollar cost averaging and getting a better price. I'm going to be reducing the price that I'm paying per share that I paid in the past. So for me, it's a good decision. I'm going to go ahead and sell 10 contracts right now. So I'm going to go for 10 contracts and I'm going to execute this for $1.12. So I'm going to collect $1,120 right now. And boom, we just got filled. So that's amazing right there. So we got filled for Apple. So we're going to add that to how much money we have made. Now, the next stock that I'm going to trade is going to be Amazon. I already have Amazon. It's actually above my current average cost by quite a lot. I'm up 37% on it. I do have some covered calls, and I would not mind having a little bit more Amazon. So I'm going to double down. This is something that I should have done a very long time ago, but I'm going to finally double down on Amazon, and I'm going to sell some put options. Now, if we take a look at Amazon technical analysis, this is going to be important. I've actually shied away from selling put options on Amazon because I was a little bit concerned that the stock was kind of hot. So indeed, I was kind of right. We had a pretty decent sized pullback. However, what I was wrong about was not that I'm good timing. No one's really good at timing the market. If anyone says they're good, they're completely lying. I didn't time this well. So I, kind of missed the boat at 175 and the stock's now back at 186. But what I can do is I can sell a put option closer to 180. So what I'm trying to do here is I'm not going to get 175. And I already know in my head right now, if I were to sell 175 options, they are completely worthless. They're worth, 30 cents. That's not that much. So what I'm trying to do right now is I'm trying to bridge the gap between where the stock is right now and 175. I'm not going to get to 175. I also don't want to buy it at 186. So I'm going to find the middle point. I'm going to go for 180. So this right here is not going to be a whole lot of money, but it's a pretty safe, consistent trade. And the worst that can happen is I get to buy more Amazon. I think this would be a pretty good price for Amazon anyway. So as you can see, this is a non-losing strategy. You really can't lose. I'm collecting some income. I just got filled, made $409.85. We'll just call it $410. The next stock that I'm going to trade, I actually had Snapshot at $9 and I was really, really bullish. And the stock actually did end up exploding up after earnings. Now it is a little bit high. So it's a little bit hard actually for me to sell put options because psychologically I have sold $9 puts. I mean, myself, my Discord, we made a lot of money. We made $1,650 by selling 50 contracts here. And now it feels really bad for me to sell a put option at 16, at 15. That's going to feel awful because I have sold a put option at 9. So now selling at 15, 16, I have to spend more than 50% from what I have, before sold some puts on. So this is psychologically very difficult. But at the same time, after this option expires, I really don't have a position anymore. So I don't really have that much of a choice besides selling some put options. I'm not going to sell that many, but I'm going to mix it in right now. And I'm going to sell some May 17. Actually, I can go for some really short. Yeah, we'll do a May 17. I'm going to go for the 16 strike. Now, why am I going 16? And why don't I need technical analysis on this play? Well, for me, I really don't have an option here. Check it out. I can go for 15. There's no money there. There's no money. Literally, it's $8. I can go for 15 and a half. It's 1% return in 11 days. Not bad. But Uncle Henry wants more money than that, more than 1% in 11 days.
So I would like to go a little bit more aggressive here. And this is a small position. Now, I'm not going to put in 10% of my money. I'm not going to put in 5% of my money. I'm going to put in very small amount. I'm going to go very small here and start to potentially get into Snapchat. I don't know if I'll get into it or not, but if I do, I'll be pretty happy actually. And if I do get, assigned on these 20 contracts, I'm just going to go 20 more. I'm going to go 20 more, 20 more, and 20 more. So I'm going to go 3 times for a total investment of, quite a lot, but in relative proportion to my portfolio, it's going to be about 5% if I were to get assigned 3 times in a row on this type of size, okay? So I'm going to review this order, I'm going to submit it, and I'm going to collect, hopefully, I got filled for $539.40. So this time we'll round it down, we'll say $539, so we'll add that to the amount of money that I have made so far. Now let's go to another stock where I can make some money. I do have Palantir. I am currently doing pretty well on Palantir, $13,000 on the stock. I'm down a little bit on the options. It's a little bit difficult for me to trade this right now. It's up 7%, so I don't think I want to sell puts, as well as they do have earnings as I'm making this video. So selling puts before earnings can be smart, but oftentimes there's a lot of volatility before earnings, so I typically don't like to sell options into earnings. I typically like to actually buy options. Buying options is better. We see American Airlines completely exploding up towards the upside now. That's interesting, so we'll see what happens there. Now, I do want to make another trade. I think that I would love to make a PayPal trade. I think that the stock is going for a really good valuation. However, I will say that I currently do already have a decent sized position of 9.69%. And for that reason, selling puts would not be smart because then I wouldn't have proper risk management. I would be way too invested in one stock, which would be very dangerous. So instead, what I'm going to do is I'm going to look for other stocks. So looking through my watch list, I'm going to take a look. And I could also easily do something pretty short term on QQQ. I don't always do this, but I can show you something kind of like a 0 DTE trade. A 0 DTE trade is something that's going to expire in the same day. This takes a lot more work. But, long story short, I would like to show you that you can sell puts really short term. SPY and QQQ both have expirations on the same day. Let's see exactly how much money we can make. So I'm going to go to sell put option, and I can scroll down to something that's slightly out of the money. I'm going to show you delta right now. So if I go to 437, you can see how the delta is 0.14. That's really good. That's a sweet spot. That means 14% of the time that this option will go into the money. That means about 86% of the time that is not. So this is going to be pretty safe. I'm going to go for this right here, and I'm going to click continue. Now, I'm not going to make this too big. I'm just going to go for 3 contracts. This is going to be an interesting trade. I just want to mix it up and show you all the ranges of possibility and give you as much education as possible. So on this trade right here, I'm actually collecting a very small amount of money, and I'm risking quite a lot amount of money, but it's also a very low probability trade that can go against me. It's also a very short-term trade of just 0 days. Okay, so we're going to add about $33 from that trade. Okay, now I want to look at something like potentially like a Starbucks. Starbucks did pull back quite a lot here, so this could be a good trade to make. I want to see what other stocks I may have here that I'm very bullish on in the longer term, because right now I give you a very short-term trade. I want to go for a very long-term trade. So a longer-term trade would mean that I am very bullish in the long term. I'm actually pretty bullish on Chipotle. However, Chipotle, I do know on the top of my head, is a bit more expensive. So I can go for something that, I have actually traded Meta quite a bit, and Meta seems to have a really strong bounce here. You can actually see how I'm up about $1,000 on a sell put that I already have on Meta. So I can just go for that again. I can go for future expiration here. I'm going to go to sell puts. I'm going to go for something a little bit longer. So we have already showed you guys that I can go for a 0 DT trade. Now I'm going to go for an August trade. It's about 100 days out. It's not too bad at all. I'm going to go for about 100 days out, and I can go down to say 410. This is a 22 delta. It's a little high for me. You can go for a 405, 20 delta. It's about right. I think this is fine. Right here, check out the bid-ask spread. It's 1180, 12. By the way, the reason why I'm not always looking at technical analysis is because I'm following these stocks on a very regular basis. I'm very close with all my stocks on my watch list. So I'm paying attention to these stocks, and I know that Meta has really, really good support around 400. So you can see here how this is 405, but my break even is 393. So my break even is below the support line. So if it hits support, I'll actually get exercised. I'll actually have to buy shares of Meta, but I'll be pretty happy because I'm going to be buying shares below what is support. So I'm actually going to be owning shares and still be in a profit because 393, the average cost here is going to be below what the stock will trade out. So if the stock goes down to 400, I'm going to get exercised, but my break even is 393, so I'm really not going to care. Okay, I'm going to be in a positive. So I'm going to go ahead and sell the 405 here, and I'm going to go for a probably decent sized position. I'm going to go for 5 contracts, and I will go ahead and execute for 1180. And just if you guys weren't sure, I wasn't sure how much money I have made. I don't see it on the screen at the moment, but yeah, this trade itself is going to bring in $5,800. So I think I'm going to pass the trading challenge that we just had. So there you go. I submitted. So we're going to add $5,899.85 or $5,900 to our trading challenge here. And there you have it. We have made a grand total of this amount of money on screen right now by selling put options. Now, some of these puts didn't expire yet. Some of them will expire pretty soon.
All right, so you just saw me make $5,000 live in under 20 minutes by just collecting premiums. But as a beginner put option seller, you might be thinking, well, those option premiums are nice, but how do I actually manage those options? How do I go about closing positions, taking profit? And now to make sure that I really don't lose money afterwards doing these strategies. And that's exactly what I'm going to cover in this part of the course.